Welcome back. The economic slowdown has impacted almost every section of the consumption space, and the innerwear business is likely not different. So is there an issue of demand or distribution or both? Let's find out from Ramesh Agarwal, the whole-time director and CFO of Rupa Company, which has otherwise managed to deliver an operationally very strong quarter. Good evening, Mr. Agarwal. Thanks so much for joining in.
Good morning. Good morning.
Just wondering, how have the last 3 or 4 or 5 odd months been in terms of, one, the demand offtake, and two, the reach of distribution for you and for the industry?
For us, the demand for the last 4-5 months has been good, though there has been a liquidity issue in the market. But we are putting all the guns on expanding our geographical base. And in areas where we are there, we are putting all our efforts into door-to-door marketing. We have increased our sales team force. And the demand has been not there, but we have to be more aggressive now. So there has been a slightly fall in demand, but we have not felt it because we have increased our marketing efforts.
What could the fall in demand be attributed to? I mean, I'm guessing people can't buy lesser innerwear, or are people actually buying lesser innerwear? Or is it that now, as opposed to the past, there are a whole host of options to choose from, and therefore the demand is getting split up between more players? What's happening?
I think people are delaying the purchase. Yeah, you're right. They cannot stop their underwear purchase, but they are delaying the purchase. So, and the choice was always there. So you have to be there amongst means you have to survive amongst the fittest. So that always has been a challenge. So I don't think that is the issue. The issue is the general sense of depression in the market.
Mr. Agarwal, if people are delaying purchases, what's the approach that you're taking with regard to pricing and volume growth? We've seen the market leaders' volume growth declining for the quarter gone by. Have you tinkered with the prices at the cost of volume growth?
No, we don't tinker with prices. In fact, prices are all set to increase now because the cotton prices have increased. So price do not have a bearing on this. Yeah, we sometimes take out schemes to lower our dealers, but that's always a short-term measure. But ultimately, the demand has to come from the market. The consumer has to buy.
Okay, I believe you guys are predominantly into wholesaling, but recently, because of the slowdown that we've been witnessing and also for the economy, and now it's proven that even an industry like innerwear is not economy proof, you shifting focus to retailing as well. How is that panning out, and what's the ratio between wholesale and retail right now?
See, the ratio between wholesale and retail is still 90 and 10, 90 being the wholesale part. But that wholesale part has become organized now. Like previously, we did not have any control on the wholesaler's sale also. But now we are providing him with sales force and managing his sales also. So slowly our wholesalers are also getting into more organized trade.
Okay, and in terms of payments, because there's been liquidity pressure and a lot of companies have been, saying the receivables have not been there on time. What about for a company like yours? Have you been receiving payment on time from your retailers as well as distributors?
We directly do not deal with retailers, but yeah, the payment has been delayed a little bit. But with the systems we had over the years, our payment has been delayed, but not that much. We have been impacted, but then still the payments are flowing in.
So what's the working capital days right now? If you could just give us a trend, what was there in the December quarter vis-a-vis the September quarter?
Working capital, in fact, has come down because we have managed our stocks well. So we had a huge inventory. We always used to have a huge inventory. We have reduced it a bit. So in fact, the working capital has come down a little bit.
Okay. Mr. Agarwal, would you reckon, I mean, just from experience of the past, if people are indeed delaying the purchases, would a price correction or some schemes or discounts do the trick? Or would you have to let time take its own course? I mean, companies may not be able to do too much. They have to tide through this period on lower sales, and when the economy or when the demand picks up is when things get turned around. What could happen?
See, as I said, schemes are all temporary measures, and we always give good schemes, incentives to our distributors to stock up. And what we believe is what is there in the market will sell. So if you are available in the market, it will take off. So the main aim is to be there in present in everywhere and increase your marketing efforts to be there in all the retailers.
Yeah, I'm sure you're trying that, sir. But what I'm trying to figure out is that if indeed people are delaying their purchase, even if you are present there, it may not result in a sale. So do you think from past experience that you will only have to tide it out and there is no way around it? Or could companies like yours or Page or Dollar Industries, some of the peers could actually do something meaningful?
See, that would mean to have a consumer scheme or a consumer offer which takes a lot of time. And consumer offers to reach to the consumer takes at least 6 to 7 months. So I don't think in the short run you can come out with a consumer scheme to lure the consumer. And ultimately the consumer has to buy. And if he goes to the shop and he does not find a product, he will buy something else. So the main aim should be to be present, to be available everywhere.
So yours is an industry which also has a very big unorganized market, and there was that hope post GST implementation that a lot of market share will go to the organized players like yours. I just want to know the trend post GST implementation. Have companies like yours, the formalized players, have they gained market share?
See, it is still too early to say because the unorganized players, they were still in the market in the sense their capital was still blocked with the dealers. So for them to come a full cycle, I think from April we should see that. But already we are seeing that there has been a growth in demand of our lower end brands where they used to directly compete with the unorganized market. So there has been an increase in that market.
Okay, so would you also reckon then going ahead, maybe next 2 to 3 years, there could be chance of market share gains for organized players?
Of course, I think so, yes.
Okay. Also, I think some of the reports indicating that the industry is pegged to grow at about 10% for next 1 or 2 years. Where do we see Rupa and Company growing at?
We hope to do better than the industry standard. So we always, like this year also, we have a target of a double-digit growth, which we hopefully would achieve. And going forward also for the next 2-3 years, we have a very aggressive growth, man, and mostly double-digit growth.
Okay, just one follow-up from my end on that, Mr. Agarwal. Would this double-digit growth entail lower margins and lower price points, or you would maintain or better those to achieve these volumes?
Those will also be maintained and in fact better.
Will be bettered. Okay. Well, we wish you all the best for that, Mr. Agarwal. Thanks so much for taking the time out and speaking to us today.
Thanks.
Well, that's Rupa and Company believing that the consumers are delaying demand, and that could be interesting. They are citing double-digit volume growth targets, but Page also mentioned that consumer offtake has seen a bit of a hit.
Yeah, Neeraj, in fact, raft of sectors have been impacted because of slowdown, and one wouldn't have thought that the innerwear segment, because it was perceived to be economy-proof, and that's not turning out like that now. Yeah,
it'll be interesting to see the underwear index, as they call it, to see what's happening there too. But, well, that is as far as the innerwear industry goes. We need to slip into a break. While that is not doing well, Muthoot Finance did exceptionally well. We talked to Komen K. Mammon of Muthoot Finance on the other side. Stay tuned.